What's up everybody, welcome to Money Management channel. My name is Andrei and today I'm gonna be doing an update on CTRM stock. And before we get into all of that, if you guys would like to earn 2 free stocks with WeBull valued up to $1,850, please check out that link in the description below. All you have to do is sign up for an account, deposit $100 and choose your free stocks. That's it. Let's continue with the company profile. Castor Maritime, through its subsidiaries, engaged in ocean transportation of dry bulk cargoes worldwide. It provides seaborne transportation services for dry bulk cargo, including iron ore, coal, grains, steel products, fertilizers, cement, bauxite, sugar and scrap metals. For now, their total market cap is $423.24 million. They have a revenue of $12.49 million with a negative net income of $1.75 million. They have a very good revenue growth of 109.25%. Their total cash, according to this data, is $8.93 million with a total debt of $18.19 million. Their current ratio is 1.24. And of course, we all know that this number of total cash is outdated because they drastically increased their cash position during recent rising capital. And this leads to massive share dilution. For now, they have around 900 million shares. And this number is drastically increased during past several months. Of course, it is the downside of this company, but why do they need this money? The answer is simple. They are still acquiring new vessels. Since I made my previous video on April 18th, they acquired several vessels. Let me count it. On April 19th, they acquired one vessel. On April 28th, they acquired another. On April 30th, they acquired 5 vessels, and on May 4th they acquired another vessel. So since I made my previous video, they acquired 8 vessels, and this is the huge amount. And let me show you the latest acquisition and let me count the total number of its fleet. On May 4th, Castor Maritime, a diversified global shipping company, announces that it entered through a separate wholly owned subsidiary into an agreement to acquire a 2013 Japanese-built Kamsarmax dry bulk carrier from an unaffiliated third party for a purchase price of $21 million. And Petros Panagiotidis, Chief Executive Officer of Castor Maritime, commented, "We continue to steadily execute our expansion plan with the addition of another Kamsarmax dry bulk vessel to Castor's fleet. Upon completion of all our announced acquisitions, our fleet will consist of 24 vessels across the dry bulk and the tanker segments." Of course, this number of vessels is mind-blowing, and especially when you realize that almost 20 vessels were purchased during this year. And of course, this will drastically increase their cash flow on the next earnings report. And let me show you that CTRM is estimated to announce earnings between June 28, 2021 and July 8, 2021. It is just an estimation dates because they didn't announce it yet. But until this date, I think it should be somewhere at the end of June and beginning of July. We might have some fluctuations around $0.5 price point. But let's continue with institutional investors. And since I made my previous video, we have a bunch of filings. All of them are in green color. This means these companies are opening their positions with Castor Maritime. And let me show you short interest. During past several weeks, we have consistent short volume ratio of around 40%. This means we might have a short squeeze. It's not 100% guaranteed, but it is very possible with this high amount of short volume ratio. And of course, we have a downside with this company. The main downside is the dilution of its shareholders. And we are on Seeking Alpha website, and this article was published on May the 6th, and it's titled "Castor Maritime Prepare for Another Equity Offering as Aggressive Fleet Expansion Continues." And let me quote you the summary. "Aggressive fleet expansion continues, with the company reportedly having committed to purchase 15 additional vessels over the past 4 weeks alone. Aggregate cash overflows upon delivery are estimated at almost $240 million, this resulting in the requirement to raise additional equity in a range of $100 to $125 million. June 28th, deadline for regaining compliance with the Nasdaq $1 minimum bid price requirement approaching. Expect the company to conduct a reverse stock split to cure the deficiency. With expectations for both a near-term equity rise and reverse stock split, the shares should be avoided. Investors looking for exposure to dry bulk shipping should rather consider buying shares of proven industry leaders like Star Bulk Carriers, Golden Ocean Group, Genco Shipping and Trading, and Eagle Bulk Shipping, or taking advantage of the opportunity currently provided at Pangaea Logistics Solutions. So, the downside is massive because if we will see another equity rise or reverse stock split, we will see another huge decline in price as we saw at the beginning of April, and on one day shares plummet for about 27%. And before we dive deep into the technical analysis, please subscribe to my channel, hit the notification bell and hit the like button, it helps me a lot. So, since I made my previous video, we have this price action. We almost hit again our support, and it might be double bottom. If we will have a reaction from this point and we will go up, this will be a very good sign from the technical standpoint. But for now we don't have much information because we don't know what will be the reaction from this level, and in this case I think you have to be extremely cautious with this stock. And let me show you indicators. And right here on a daily time frame, we might see a bullish divergence. If we will have a curvature right here on RSI, we will have higher lows with the RSI with the double bottom, or we might poke this level through and from this point have a reversal. And this price action will give us lower lows with the higher lows on RSI, and it will be a bullish divergence. It's not 100% guaranteed that we might have a trend reversal somewhere near, but it is a bullish sign that usually works. Let me switch to 4-hour time frame, and right here unfortunately we are still bearish. This means you have to be extremely cautious with this company. But on the flip side of the coin, you have to keep in mind that on the late of June we might see very good earnings report. And this earnings report might be a very good catalyst for this price. And if you decide to invest in this company, and if you realize all the risks that might be with this company, with the stock of this company, you can add your position at this point and ladder your buys down. For now, I don't have enough information how deep we might go, but if we look here, we can see that at the point of around 30 cents, we have another support, potential support, that might hold this price action. Next potential support at around 17 cents price point, but it is very deep according to current price. And that's why I think you have to be extremely cautious, and if you decide to invest in this company, you can ladder your buys down. And for now, I think it is too early to make some projections about potential profits, because we don't have trend reversal yet and we still technically in downtrend. That's why we can project only next potential resistances that might be on a way to the upside. And these resistances are at $0.65 price point and around $1 mark. So I think for now that's it. Be prepared to potential trend reversal and be extremely cautious with this asset. With that being said, please subscribe to my channel, hit the notification bell and hit the like button. This helps me a lot. See you guys and girls next time. Bye!